Alibaba was once a $300 stock, but now is trading at prices under $85 a share. In this video, we will be answering the following questions. First, what has caused Alibaba's stock price to fall over 70% over the last 3 years? Second, what are analysts expecting from Alibaba's earnings on November 16th? And finally, what does Alibaba need to do to get back to a stock price of $300 in the future? So if you enjoyed the video, make sure you hit that like button, and if you want to see more videos like this one, subscribe. The first major drop in Alibaba's stock price came in early November of 2020, where the stock fell over 10% in just a few trading days. This drop came on the back of news that Ant Group's record IPO of over $34.5 billion was being suspended by Chinese regulators. And this was important for Alibaba as they own a 33% stake in Ant Group. And this had a huge effect on Ant Group's valuation, as experts expected these new regulations to cut their value by over $150 billion. And even despite these new regulations, Alibaba's business was still thriving. And their cloud growth was outpacing the likes of Amazon as well as Microsoft, as they reported revenues of $2.2 billion, which was up 60% year over year. Along with Alibaba's amazing cloud growth, they also reported record sales of $56 billion on China's equivalent of Black Friday, known as Singles Day. However, even with that, the stock fell by 10% as China announced new regulations. These new regulations defined what constituted anti-competitive behavior and included items like pricing, payment methods, as well as the data that's used to target shoppers. And these new regulations had a huge effect on Alibaba's stock price, as the stock fell over 15% in December of 2020. And this tumble came on the back of news that Chinese regulators would be looking into Alibaba for suspected monopolistic behavior. And in the first quarter of 2021, things continued to get worse as China began issuing out fines to companies that were breaking these new regulations. And for some companies in China, these fines were relatively small, as they came in at $77,000 US. However, for Alibaba, this was not the case. They were hit with a $2.8 billion fine for demonstrating monopolistic behavior. The primary focus of this investigation was on a policy implemented by Alibaba that required merchants to choose between one of two platforms rather than being able to work on both. Chinese regulators stated that this policy infringes on the rights of businesses as well as the legitimate rights and interests of consumers. And these new fines and regulations began affecting the business as well. They announced their earnings in early May, and the stock price fell by almost 10% in just a couple weeks. And this fall came on the back of news that Alibaba posted its first ever operating loss, as the company was hit with this $2.8 billion antitrust fine.
And Alibaba earnings, guys. So
what are we thinking here,
which
David?
we should take a look at. Stocks, I think I got it down just a tiny bit here, right? Bob is down, yeah.
Well, it wasn't
almost 3%.
It wasn't a perfect quarter, but
no,
it's got unbelievable growth.
Revenue number was still strong. They're investing a lot in the business, and so the earnings number may not have been exactly what everybody was hoping for. Remember, you did have this big fine, the antitrust fine that they paid, so that actually had the effect of overall depressing the earnings number if you take that out.
But did you listen to Masa-san on companies like this?
I did.
I think that these are...
Masa continues to be one of the largest holders. They have sold at SoftBank some of their Alibaba.
But this company makes a lot of money.
Yeah. Alibaba makes a lot of money. Yes.
I like that. That's the kind of company I like. It makes a lot of money.
Right.
Is that too much to ask, David?
No.
And things at Alibaba seem to only continue to get worse, as the stock dropped almost 20% in August of 2021. And this drop in the stock price was followed by a decline of almost 40% in just a couple of months. Even though Alibaba for the second year in a row posted a record number of sales on Singles Day, the company was showing weakness as they slashed their guidance and earnings as the Chinese economy was beginning to slow down. And these concerns around Alibaba as well as the Chinese economy came to fruition in the first quarter of 2022, as Alibaba reported its slowest ever revenue growth. And just to add fuel to the fire, in the first quarter of 2022, the SEC began coming after Chinese companies as well. They listed Alibaba as one of 5 US listed companies that had failed to comply with the Holding Foreign Companies Accountable Act. This act allows the SEC to delist or even ban companies from trading on US stock exchanges if regulators cannot review company quarterly audits for 3 consecutive years. And by March of 2022, the company was now trading under $100. And Alibaba immediately began going on the offensive as they announced that they were increasing their share buyback program from $15 billion to $25 billion. And as the stock continued to trade lower in the spring of 2022, a once bullish Charlie Munger would cut his Alibaba stake in half. And a year later, he would have this to say about the company.
The Communist Party didn't particularly like his speech. And pretty soon he just sort of disappeared from view for months on end. And now he's out of BYD. It was pretty stupid. It's like poking a bear in the nose with a sharp stick. It's not smart. And Jack Ma got way out of line by popping off the way he did to the Chinese government. And of course it hurt Alibaba. But I regard Alibaba as one of the worst mistakes I ever made. In thinking about Alibaba, I got charmed with the idea of their position on the Chinese internet. And I didn't stop to realize they're still a goddamn retailer. It's going to be a competitive business, the internet. It's not going to be a cakewalk for everybody.
And by the fall of 2022, the Chinese economy had slowed down in a major way, and this was directly affecting Alibaba's business as they saw their first ever flat year-over-year quarterly revenue growth. And a lot of this slowdown had to do with China's policies around the pandemic. By this point, a lot of countries had lifted their restrictions, but China was different. They had very strict rules around lockdowns, as well as implementing mass testing to try and contain the virus. And the poor economy in China overshadowed some good news around the delisting of Chinese companies from US stock exchanges. US and Chinese regulators reached an agreement that would allow US auditors to enter China and audit Chinese companies' books. And this would prevent Chinese companies like Alibaba from being delisted. However, even with this positive news, in October of 2022, Alibaba's share price fell to a 5-year low of under $65 per share. And these new lows came as President Xi won his 3rd term as leader of China. This created fears in investors that the Chinese government would continue using policies that had slowed down growth in the Chinese economy. However, since his re-election, we have seen some easing of restrictions as Ant Group actually got approval to expand some of their consumer finance business. And we have even seen China begin to lift some of their pandemic restrictions. However, even with this policy change, we have only seen the stock recover 30% from its 5-year lows. So with that, what are analysts expecting from Alibaba's upcoming earnings? Analysts are expecting Alibaba to report EPS of 15.11 Chinese yen and revenue coming in at 224.76 billion yen. That's equivalent to an EPS of $2.07 US and a revenue of $30.8 billion. Analysts on Yahoo Finance have slightly different expectations around EPS. For their average estimate, they have $2.12, a low estimate of $1.71, and a high estimate of $2.36. A year ago, they reported $1.92, so if we see them hit this average EPS estimate, that would be an increase of 20 cents year over year or 10.5%. However, over the last 4 quarters, we can see that Alibaba has beat analyst expectations by double digits each quarter with an average beat of 15.6%. We can see that for 2024, analysts have an average EPS estimate of $9.08, a low of $7.68, and a high of $9.93. And when we compare this to a year ago of $7.64, we can see that the average EPS estimate would be almost 19% growth year over year. And analysts have that EPS growth rate slowing down to just under 10% in 2025 with an average EPS estimate of $9.95, a low of $7.27, and a high estimate of $12.26. And this continued EPS growth as well as the expansion of their valuation is how Alibaba could get back to $300. Right now, according to Yahoo Finance, Alibaba is trading at an 8.99 forward PE ratio. And if we run the numbers for ourselves, we get a little bit more conservative PE ratios. We can see that based off the 2024 estimate of $9.08, we actually get a forward PE ratio of 9.17. And in 2025, if we see EPS come in at $9.95, that would result in a forward PE ratio of 8.37. And if we see Alibaba's forward PE ratio expand from an 8.37 up to a 15 to a 20, we would see their price increase to $150 to $200. But for Alibaba to reach that $300 $400 mark, we need to see a couple things go right. We need to see them beating their 2025 high EPS estimate by that 15.6% that we have seen them beat by over the last 4 quarters. That would raise their EPS up to 14.17, which would be a forward P ratio of 5.87. Along with that, we would need to see Alibaba's forward P ratio expand anywhere from 20 to 25. This would result in a price target of $283 all the way up to $355. Personally, I think it's possible for Alibaba to reach a forward P ratio anywhere from 20 to 25. However, I think it'll be more difficult for them to reach an EPS target of $14. And for Alibaba to hit $14 of EPS, this would require a lot of growth in the Chinese economy. Personally, I think it's a lot more realistic that Alibaba hits a price of $150 over the next couple of years, but keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button, and as always guys, have a wonderful rest of your day.